Ethereum is in a great place for a short, having lost the 200 MA on the 12-hour, but could this dip be a bear trap? And does that even matter? The price action has sadly lost the 200 MA on this time frame, meaning we are now back in the previous trading range we were back in March, which tops out around 2,150 and bottoms at around 1,800 dead. So a serious bearish signal for Ethereum, because of course we did manage to open the door in March to this upper trading range, which tops out at around 2,370, 380, which you can see here has been respected. But the price action, despite having managed to get above the 200 MA on this time frame and flip it, as we came back to test local support, which had lovely confluence with the 200 MA, surprisingly, the bulls haven't shown up here. And that is simply because Bitcoin is overextended and it now has a lot of downside potential, and investors understand that, meaning they weren't willing to show up here at 2,150 for a local support bounce, which would look something like this, maybe trade the range a little bit more and then open the door to higher prices. Bulls just haven't shown up because of the wider market bearish sentiment, and therefore you have a short opportunity now for Ethereum because we're in this lower trading range and we're currently at resistance at around 2,153, and this moving average, the 200 MA on the 12-hour chart, is acting as resistance. So you have nice local resistance and 200 MA confluence for a short play, and the most logical place to take profits would be what was local support of this range at around 1,800, and expect the price action to at the very least do this, or potentially the downside risk is of course to come down to much lower prices and lose local support. Now, could this be a bear trap? Could the price action suddenly recover? Yes, it could. That is also a likely possibility if Bitcoin flashes green. But the reality is that even if you enter for a short here at 2147, around that area, 2150, and then you do get a break, that's no big deal, because the market doesn't seem capable at the moment of giving us like a sudden move up like this to leave us holding the baby. What you will see if you get a break in the wrong direction, you will see a likely retest of this local support area, allow you to reposition and get out, which is making the short entry here not necessarily highly probable, but manageable in terms of risk. And those are the sort of trades we need to be taking. One where we have a clear direction, a clear bias, definable TA with confluence, but also with a clear definable strategy if the price action goes the wrong way, meaning you can manage it when it goes any direction. Those are the sort of trades in crypto we want to take. So currently we're looking for a short entry in around 2,144 until we see a break back above the 200 MA on the 12-hour chart, on the premise that we're going to see the price action trade within this range at the very least, looking to take profits around 1,800. That's Ethereum.